I think right now what I need to do is yeah, let me just send in the Zoom session link. So for those who are going to miss it, and for those who are going to miss this one, okay, let me just send in the Zoom session so that when I explain everything, for those who are going to miss the Zoom session, you can still come back to the live video here. Then they'll get the same information. It's more like a recording and stuff. So let me just create a Zoom session, a Zoom link right now, because I want to explain on this is why you're seeing right now, you're seeing crash and boom on the other side. So I just want to briefly explain how you can actually know the trends and stuff, to make it easy for you guys, huh? Right, so there's a comment section. I mean, there's a live chat on the side. You can make use of that. You can ask some questions and stuff. Because after the Zoom session is done, the live will still be there. So you can probably ask some questions. Just drop some questions from there. I'll be able to see them from here, so we can interact on YouTube right here. So for those, all right. So right now, I think I'm going to send in the Zoom session link. I think right now what I need to do is yeah, let me just send in the Zoom session link. So for those who are going to miss it, and for those who are going to miss this one, okay, let me just send in the Zoom session so that when I explain everything, for those who are going to miss the Zoom session, you can still come back to the live video here. Then they'll get the same information. It's more like recording and stuff. So let me just create a Zoom session, a Zoom link right now. Because I want to explain on this is why you're seeing right now, you're seeing crash and boom on the other side. So I just want to briefly explain how you can actually know the trends and stuff, to make it easy for you. Right. So there's a comment section. I mean, there's a live chat on the side. You can make use of that. You can ask some questions and stuff. Because after the Zoom session is done, the live will still be there. So you can probably ask some questions. Just drop some questions from there. I'll be able to see them from here, so we can interact on YouTube right here. So for those, right. So right now, I think I'm going to send in the Zoom session link. Good evening. All right. I don't know if everyone is here right now, but to be good that everyone is here right now. Okay. All right. Okay. So before we even start, so before I say much about everything right here, I just want to welcome everyone to the live and the Zoom session. So basically, what I want to do right here is I want to show you how you can know a trend, like how long can a trend go. Then, like I said, like I always say, according to what you're trading, the market structure is going to be different. So what you're going to see happening on Crash 500 is going to be different from what's going to happen on Crash 1000. What's happening on Boom 1000 and Boom 500 is not going to be the same. Same applies to 300 pairs and so forth and so on. So every market has its own structure. So when you understand the structure, that's when now you can make use of what you know to find confluence in the market or to find conditions in the market which are going to make you at least be profitable. It's not every time where you jump into the markets and stuff. There are times where you can jump into the markets. There are times where you can see. All right. So here I'm able to alternate using. I think. I think let me just do this because I'm able to alternate. So let me just do something like this right here. hmm Since I'm able to alternate, let me try. Mm, where's Zoom? Where's Zoom? Where's Zoom? Anyways, I hope the case is going to be shown on the live. But anyways, I'll try. I'll be alternating on the Zoom so that people can understand. All right. So as I was saying, it's not every time where you just jump into the market. Yeah, there are times where you can find trends in the market. So right now, I'm just going to give an example. I know some of you can know full price action. You know how to go about setting up your thing. You know how to do all those things. You know all those things, yeah. So let me just explain a little bit how this can help you out. Where if you look at making profits, where you just want to make profits, not really knowing everything which you need to know, where you know how to go about uh, the price action, looking at your resistance, support zones, all those things, getting to know about all those things. The reason why we have a system is to make things easy because it's all about confluence, knowing the conditions. How to know the right conditions? Do you have to go in all the time frames for you to understand what's happening in the market? Not really. Your analysis is going to be based off a higher time frame, right? You can go on maybe the daily candle, the daily time frame, or the daily time frame. You can see that this is a bullish trend. The market has been bullish. We can see lower lows, lower lows. The market is creating lower lows. It's going all the way down. It's more like a channel right now. Uh, Coming from that point, going all the way down to that point, you can see that the market hasn't broken any previous high point. So since it hasn't broken any previous high point, like this high point, it's still in a bullish. I mean, still in a bearish trend. So in this case, we're looking at Crash 500. What do you do when you look at a structure like this? You start looking for selling opportunities because the selling opportunities are going to be more than the buying opportunities because the market is going. downwards. So from that point going all the way to that point, you can see that the market is just in a bearish trend, meaning the market is going all the way down. If you look at the reversals, which you can catch at this point here, they're not going to be more profitable than the trend, which is going all the way down like that. If you jump in there, yeah, you can make some profits, but you really have to know where to take your profits, and you need to know where to take another entry, where to take your entries from. So how is this system special? I would say, how is this system special? Because all you can see right here, you can just see some random things which you can't even understand. But for those who are under the mentorship, I'm sure they do understand. Because the system, you can use it either by following what the signal is given, what it's giving you. Like, if you look at the buy signal from that point, you look at the crossing of the moving averages, it is a direct move to the downside like that. Which means if you jump in from that point for a buy, for a sell, sorry, you jump in for a sell. The highest point in the market is this one. You see, there are just some indicators right there. I'm going to show you this is the highest point of the market. This is the entry point. So if you jump in as a swing trader, you want to catch a nice trade from that point. Let's say in this case, on this account, we have something like that. I think the highest lot size is the highest lot size. Boom or crash is going to offer. We have something like this. So let's say on this account we do a sell from that point right there on the top part like that. Then we modify the entry looking at the sell stop. These are just examples I'm trying to give. So sell stop, take profit, to just going to take it all the way down to that point right there. So yeah, where is the sell stop? Okay, this is the TP. Okay, so the sell stop is a bit tight. Alright, let me just sort out the sell stop. So that when I give an example, you can see. So if you're just going to try and jump into the market just using the 600, so if you're just going to jump into the markets just using the normal signals being given to you, okay, that's way too much. Alright, that's way too much. Let's see. So on a daily, if using the highest lot size, that's way too much using that lot size. So let's just try and use something a little bit smaller than that, because this is the highest lot size. Crash and boom offer 50 lot size. So on an account like this, it won't make sense trying to swing on such a lot size. So a lot size on this account which you can use is probably going to be 10, just $10. So at least your risk to reward is going to be something which is normal. So let's say you saw a signal, you jumped in, you took it. I'm not really saying that you're going to find yourself in a loss, but what I'm just trying to say right now is when you find an opportunity like that, then you jump in the market. Chances of the market reversing back to your entry point or reversing back to the highest point are less. But yeah, these things do happen most of the times. You can find maybe you jump in from this point and it goes against you like that, which means your sell stop is going to be hit. You jump in from this point, you expect the market to go. I don't know if you can see it, but let me just try and do this. Yeah, so you jump in from this point right here, and you find that the market goes against you here, which means the sell stop is going to be hit. You are in profits all the way to that point, then yeah, you held a little bit, then the market takes you out. So we want to avoid all those things. So yeah. So the thing is here, this is one trade. This is one example you can take. So you find that you're only risking about, this is 20% of your account. This is lot size 10. You're risking like 20% of your account. Then the win all the way to this point. This is like 27,000, which means you have made about 270% of your account. If you are holding on this trade for some time, though we're going to also have some swaps, because these are daily candles. So on the daily candles, I'm sure you're going to have some swaps and stuff. So anyways, a normal trader, yeah, you'd draw your trend lines there. I'm sure the trade that which I'm trying to show you would be based off a breakout, where you see a trend line after a breakout, a retest at this point right here. Let me just automate so that people can see. Here we have a breakout, then we have a retest here. Then we can see that this is a trend line which is touching a lowest point, a lower high. I mean a higher high, a lower high, another lower high, then a breakout at that point. It's following the trend line. Then after a breakout, we see the market doing a retest at this point right here. Then afterwards, you can see the crossing of all the moving averages. Then the market pushes the price all the way down to that point right there. These things do happen most of the times. So there are chances where you can actually catch this nice move. But just to be honest with you, the first time I tried to swing on boom 1000, it was a hell of a week for me, because I was trying out something like for the first time where at least I can hold multiple positions for a long time. I couldn't sleep. I had migraines. I was checking the markets. That's one thing I won't lie to you. I won't say I jumped into the markets and I was just cool, just thinking that the market's going to be profitable and stuff. I was anxious to see the trades. Each moment, every hour, I would check my trades. Sometimes I'd go the whole day without checking, but yeah, it gets you emotional. But once you break free from that, yo, things become a little bit easy for you. So that's how it is. If you're having those winning trades, they boost your confidence. But if you're always losing and you're always losing, you end up giving up, and that's one thing we don't want. So yeah. So sometimes the market can seem as though it's going against you, but in the actual sense, as long as there's much confluence in the market, just try and hold. This is why I'm here to show you the kind of lot size which you need to use on an account, the entry points, the TP points, the zones, so that you understand all those things. So unfortunately for some of the guys who are not under the mentorship, once the live is done, I'm sure you're going to get less information. But that's the whole thing. The guys in the mentorship, that's the benefits which you're going to get. Yeah. So we're looking at the structure. We start. So yeah, let's say in a week. This is a whole week. Eh? You have the weekly time frame right here. You look at what's happening in the week. It's clear. From that point we have a sales signal, and from that point the market has been pushing price down until it gave out a signal for a buy, but it's continued. If we look at this, the exponential 40 moving average is above the candles, so which means it's a bearish move like that. And the good part is, once the market is bullish, it tends to blue, and once the market is bearish, it tends to red. So that it's easy for you guys to know. We can try maybe using even the Fibonacci. We can see that the Fibonacci, the breakout happened at the level 23.6. This is a normal thing. We had some resistance on the level 38. Yeah, it's a normal thing. We had the golden ratio where the market ranged a little bit. If you look at this, there was a block. This block was was in the golden ratio. It's also a demand zone right there. Depending on the methodology you're going to use, this candle, we know that the last bearish candle before an impulse move, those things, it's easy for you guys to know if you understand. I'm just going to walk through fast on this so that I get to what we're here for. So you start analysis on the higher time frame. You look at the higher time frame. What do you see in the higher time frame? If you look at the week, even this week, the market is pushing price down. So for the week, if you look at the sell signal, that's not that much. So which means every day you're taking a trade, which are going to be highly profitable, are the trades which are going to sell, not the ones which are going to buy. Same applies here where you see the buy signal. When everything shows that it's blue, you start entering for buys, because the spikes are going to be less than the buys. So this is on a higher time. Every week counts. And one thing I'm just going to tell you, 2 p.m. 2 a.m. here, Central African time +2. That's when the day starts. In the UK, it starts at exactly 24, but I'm sure now it should be around 1 a.m. So look into that. The derive time is for us. The derive time is always 000. So yeah, depending on where you are, you should look. For that. That's the daily here. Like I said, yeah, GMT plus 0.02. The daily candle opens around 2 a.m. in the morning. So look up. You can check. Depending on your region, just check when the day opens. But on a Sunday, that's when the weekly candle opens. So when the weekly candle opens, in this case, this is where now candlestick formations are going to help out. You look at the candlestick formations. Here you can see there's a shooting star. You can see there's a spinning top. You can see anything which is going to show you that the market is going to be bullish or bearish for the week. The close of each candle counts. Is always the candles. The close of each candle counts. You can look at for engulfing patterns. You can look for like gravestones. You can look for out. So it's important for you to know the candles you're dealing with. Though for boom and crash, we can see maybe different candles. Sometimes but anyways, first you need to know the candlestick patterns, and once you know that, it's going to be easy for you to know how to trade. Because for some of the people, they even ask, how do you predict the next move? How do you know the next move? I just look at the candlestick, the previous candlestick. How did it close? How is the new candlestick going to open? With that information, it's already confluence for me to know the next move. Plus, if I go on a lower time frame, I see what I see more confluence. I can take a trade on the screen. You see of reds. If it's going to be red, then it's something else. Which not the system, but me myself made a mistake. The system is just okay, but me myself maybe or being impatient is what makes me lose out on that trade. But otherwise, the patterns which a system provides, which the system gives you, they're safe. I would say it's gonna happen. The market goes up. What do you see? A long trend like that. Let me just show you on this. They formed from this point here. What do you see? A trend, a long trend. And here, what do you see? From this point here, can you take a buy trade here? Can you take a buy trade here? Can you take a buy trade here? No, you can't take. Why? If you look at this, we don't see any red. We don't see any white here. We only see red, which means the market is still trending down like that. So you can jump in from that point and catch the trade like that. Easy. Easy. You don't even need to complicate things. Unless you yourself fighting, thinking, okay, no, something's going to happen, this and that, this and that. No, that's the only thing which is going to draw you back. So yeah, I was talking about the EA. So according to how the thing how the time frame is, and the moment the market does another crossing here, we can see that this is where the buy is going to be. So this is what here is let's see it right now. It's made to give you this. Whatever is going to happen, the market comes back. You just have to. You don't know. You're going to be scared. If you don't know your opponent, you're going to be anxious. And when you're anxious, your heart will be racing. So if you know what you're dealing with, and you know the amount of risk you're putting on your account, then it's easy. You know that when the market goes against me, I'm making this loss. When it goes to this direction, I'm making this amount. Then it's easy for you to trade. That's the first thing which you need to know. And how to know about that? For mobile users, it's going to be difficult because you're not going to calculate unless you know how to calculate this. And I know unless you know how to calculate the pips. And they're there. They're there. On my end, they're there. I don't know. Here, you seen? Yes. Oh yeah. You couldn't choose. Okay. Anyone else? The yellow MA shows you the entry. When it curves, it will show you that okay, this point um you can either scalp, but the overall trend it shows the direction of the the trend on the PC. It's because for people who are using mobile, we don't get to see the signals. If you're not connected with the MT5 for the PC to your phone, you don't get to see the signals. So when these cross, when the red MA goes under the yellow MA, which means it's going to be what? Here is an example. You can just see it for yourself. When it goes under the yellow MA, what do you see? When the red MA, you, yeah, it gives a signal. Then what do you see? It's a bull. Yes. Yeah. So in this case here, we don't take that because we don't see anything to show us. So at this point, we are safe. So the market continues. Plus, the exponential is on top and it's red. So it continues. Now, after a move, if we reach this point, we can still see this. So let's say, for instance, you jumped in for a buy at this point. Do you think you can recover this trade, or you mess up? The chances of recovery are there, but looking at today's trend and the way it was coming with a lot of momentum, the trade which had the signal, which was buying, yeah, pushed the price all the way up to a point. But the reason why this was very hard to recover is because here we didn't see any white like here. This didn't change, like it didn't confirm for you. So if you took it, it was at your own risk. You would have taken at the red MA, because most of the time they say the red MA is where you do what? You take your TP if you're scalping, because anything can happen. You're going against the market. The scalping you're doing, you're going against the market because you want to see instant profits, isn't it? So you're going against the market to at least make those instant profits, and you're out. So if you're caught up, you mess up because you didn't follow the trend. But if you follow the trend, it goes all the way nicely down. So in this case, what happened here is your entry would have been here. The first spike spiked. This small dot which came here was a way of you to save you. Just telling you, okay, at this point now, get out of the market. Otherwise, if you don't get out, things are going to be bad for you. So it came. But if you took a trade at this point here, the first one came, it spiked. We had a zone. The market created a zone. We'll talk about the zones. After the spike, here we don't see any zones created here. We don't see created a zone. So which means the market is likely to come back to that point. So if you are in a buy at this point, even if like that, that's why the market is going to come back. You see? It came back here. So if you jump, unless you have some issues, you're still in the market. The market spiked here, you're still in the market. What do you want? Then you want to blow your account. The market goes all the way down. Yeah, because you're going against the market, and if you're going against the market, you don't need to stay long in the market. What you need to do is you need to sell. Because if you look at it on a higher time frame again, on a higher time frame, it shows you that the market is actually going down. Everything is above the candles. When everything is above the candles, then the market is going all the way down. So you see, the market goes all the way down. It goes all the way down. You see? But the good part is this one here could have recovered after a spike. Under spike, you still recovered. But you are greedy. This is what you call greed. And boom. You see what your greed does to you. Goes against you like that. Then in this case again we have these. This is more like manipulation because the trade. This is why you don't see me taking trades there. But I took a trade there after the spike, after 1-2. I was like, oh, there's something which happened here. Let me try and jump in just for a short time. But what happened later on, we had the gap. These gaps are also important because when you see a gap in the market has to cover that gap. So yeah, and these also, don't just look at this. The market came back here. So here we look at this, be like, oh, this is where maybe the next take profit is going to be. So if I take a buy, let me just put a sell here, just in case, because this is our last take profit. We'll see how the market went all the way down. So from this, I think I even talked about this on 1 minute. Where sometimes when the exponential is above, well, the moment you see the signal being given to you, don't take it as a buy signal. Take it as a sell signal because that's the last candle before a spike. It can maybe do a 5 minutes trend. Then after, this is where you see the spikes. Note that down. So yeah, on the 1 minute time frame, when the exponential is above the candles, then you red MA. And when the red MA, just look at the structure the way it is. Because when the red MA is touching the candles, it spikes. It touches the candle, it spikes. Then just a small change, you see that it will fall a lot. There's a distance between the red MA and the golden MA. The moment you see that gap, when you see, you can even calculate the amount of candles. There'll be 1, 2, 3, 4, 5, 6, 7, 8 candles or more. Then you see a one green candle. Just know that the market's in a continuation and the spikes are going to be big. So you can use that as your take profit, because afterwards, when all the conditions have been made in the 5-minute time frame, it will come back to that point. It will create more like a zone, and that's a zone which got created. Just here, it created a zone, which now we can see the market is ranging here. So yeah, so from this point, we were putting just that is this candle, the last candle which is here. You see, by the close of the 5-minute candle, it was still a control, because if you take even a closer look here, everything seems like everything was above the candle. So which means the market is pushing the price down. Yeah. So after that spike, yeah, I pushed the price down. Jumped in there. I was like, it's a bit early for the market to come back to that point. I think I just took, I was out. Then yeah, the market continued going all the way down, going all the way down. Then it's an interesting part. Like I said, taking the trades, taking your buy trades while you see the signal here, is just fine. As long as you see the confluence here, you see the white one here, you can jump in. Despite the spikes, these spikes, you're still safe. This is the 1 minute. Like I said, you don't stay longer in the 1 minute. So here it pushed the price all the way up to that point. The spike came, and thing happened here. You see? Here what happened is the market was trying to do that. The crossing happened. It's trying to push the price up like that. Then yeah, as long as this one is on top, everything else, you can see that we avoided that, but we took a trade there, just a quick scalp, because we saw that the market was still bullish. Then the other thing is, you just don't jump into the markets like that. You look at the 30 minutes, the close of the candles. They are very important. When the new candle is opening, this is why you see some of us taking advantage, because here we just took advantage of the 5 minutes candle, which was this one. Then later on, we took a rest until we found the market was pushing the price to this point here. I think the moment I just moved out of this trade, I started doing other things. Then the time I came to see, I found the market was at this point here. So yeah, so you can see that the market pushed the price all the way down. Then the other thing is, you see, the whole thing is all about breakouts, yeah. So if you even take this one, the trend line here, you can see just after the break of this trend line, let me just color of it and make it gold. I also have a video on this, where if you look at the pattern, where this pattern, after the breakout, the market pushes the price up. We can see that the pattern was here also. It was formed here. After that pattern was formed, we can see that this changed to white. Yeah. So now you jump in for a buy at this point here. You see? So which means if you jumped in and you decided to hold from this point, the market still came back and covered up that point. So now, in this case, we have come back to the 5 minutes. So if you jump in the 5 minutes, at this way now you see what? The signal in the 5 minutes. Have you seen that? Yes. In the 1 minute, everything has crossed. Everything. It has been confirmed. Everything is confirmed. That's why you see what? The buy signal. So all along here, like I said at first, all along here, we don't see any buy signal. We only came to see this where all the crossing happened. So here it changed from red to blue. Here everything was blue. Here this one cross came there. We had these bars, the black bars there. Then now we push the price up. We have the white one. This one changed to blue. Everything was just pushing the price. It's going to be very blue. We're going to see what we're going to do so that people can see. All right. So you see, you jump in now from that point, and the market goes all the way up. You see. So in my mind, what would have happened is I would have taken my TP on top right there if I was aware, if I was in the markets the time this was happening. But I was unfortunately I was not there. So I mapped out the zone. There's something which happened. I started taking my trades at that point right there, and you can see now after that spike, I was out. Where you jump in there, you're out, you're in, you're out. This is a range break like that. So It's in and out, you're in and out. You don't lose anything. When the market is ranging, you don't lose anything. Because you jump in for a buy here, the market catches you, it still covers up. You jump in for a sale any point. Anywhere you take a trade there, it's a winning trade for you. That's a good part about the range. But after the break, because this range, you know why it's ranging? There's a support here. We have a zone here. It's failing to break this zone. We have a resistance where it's supposed to go. And where it's supposed to go, if you look at on a hard time frame, like 4 hours right here, we can see that on the 4 hours, the market has created the new low. Then if you look at it on the 1 hour, we have a candlestick pattern, which is supposed to push the price up. We have a spinning top, and we have these candlesticks which are in the range. When the market breaks, it can come back to this point on top right here. But if it doesn't, which means a continuation, we can still see the market going all the way down. To continue going all the way down, we're supposed to go. Because everything, if you take a closer look here now, from that point, you can now makes a lot of sense on a hard time frame. Yeah. I'm sure it now makes a lot of sense on a hard time frame like that. You see? So yeah. So the time we came, we found there's a zone at that point, right? There's a zone at that point. So let's take advantage of that. We drew a zone. The moment the market pushed the price to that point, we caught at least a spike right there. So these spikes, it's easy for them to be caught. But for crash, it's a different story like that. It's a different story. We'll talk about that nicely, personally. Then I think for this one, let's look at the last one, which is this one. This one is very straightforward and very easy. Because for this one, you can even enjoy. For this one, if you're trading the 1 minute time frame, you don't even need to be scared a lot. But if you get caught up by these spikes, there's something else again. Because the spikes are something else. So yeah, for this one, I'm sure you know. If you hold for a long time, if you want to catch the spikes, use this as a take profit. Because the moment the market starts spiking, it will definitely cover up the red bars. In most cases, it does cover up the red bars. So yeah, you've seen. This is that. So now let's go back to the 1 minute, yeah? Is this the same thing? Today is 10th. Okay. Yesterday was 10th, huh? Okay. Yeah. So we're here. So you've seen in 15 minutes, it's even giving you a signal to what? To buy. So here everything is white. So you'll be like, okay, you're just going to. It's either you wait for the opportunity to what? To sell. But when you buy, you are actually even very safe. Because when you buy in this state, you find the market like that, and you buy here, you buy. You just look at the previous low, which is going to be what? Sell stop. You put it a little bit down, 55, down like that. Are you guys seeing what I'm doing right here? How I'm doing where to take profit and stuff? Because this is going to be helpful when you're putting buy stops, orders and stuff. You jump in with oh wait, that's what size 50. Anyway, sorry guys. This is going to be $5. Oh, it's going to be $5 or 50. 5 or 50. 500. Okay, lot size 5. That's 550. Lot size 0.5. That's $5.80. Yeah, $5.80. So you jump in there. You'll be like, okay, so when the market goes against me at this point, I'm going to lose out. I'm going to lose out $5. Then the magic happens. You catch the spikes. You make $30. Ish. That's one easy 3K. Okay. Lot size 50 is doing something. 3K. Okay. Alright, yeah. So that's like $30. So from this trade, you're risking $5 to make $30 on just catching those. Because what you're going to be doing here, if you jump in here, you're just going to be making small amounts, big spikes. And one thing I said is, when you start seeing the big spikes, it's not the time for you to start selling or trying to do the reverse trades. It's going to mess you up. So when you start seeing the big spikes, just look for opportunity to do what? To buy. So here, it has turned to what? Red. Then here you have a signal. then the market pushes the price down. You can see the spike. The market tries to push the price down. From where you see the signals, look at this, spikes, but comes to cover up those. You see, same thing which happened. Now, in this case, now one thing I wanted to say is, or repeat myself, is when the RSI crosses below the level 70 here, then this is where now you see your entries from that point to that point, or you can hold the trade. Then this one, when it crosses to the other side, that's why now you see the trade pushing the price all the way down. What's the time? Remaining with 2 hours. One last Zoom session. Then we start the individual Zoom sessions. I think the live is going to be over very soon. With that information, it's already confluence for me to know the next move. Plus, if I go on a lower time frame, I see I see more confluence again. Our last Zoom session, then we're probably going to be done. Here's the Zoom session. So yeah, on the 1 minute time frame, when the exponent something like how much can you have, how much would you have lost? Let's just be specific here. Yeah, you jump in there, you lose something like $6. So from that 34, you lose $6, which is or $5, something like 5. It's going to set you back something like 29. So that 29, you jump in, you make another 10. That's like 49. You try and jump in here as well. Oh, you try and jump in here as well. You get messed up. That's like $5, $6 loss. Is it? So if you're following that, but there are some times where trades are not all that good. But a good, let's say here, you try to jump in that point to mess you up. You didn't follow something here. But if you follow exactly like I say it to be, you find that you end up making good profit. Let's say you're trying to make $1 per trade, or you're trying to make let's just say $1 per trade on a small account. It's possible. You can actually on Boom 500 you can actually make $2.50 on each position. So let's say you jump in from here, and I'll explain now why you even jumping from this point right here. You sell from that point, right? And you go down profits of 59, jump into a point. Let's say somewhere here. Right. So for this one, which means you'll be taking each trade according to what you see. So what do I mean by that? What I mean is you see, when the spikes, the moment the market comes back, when it crosses below the level 70, this is where you now take a trade. When the market is coming to the level 70, this is why you take a trade. So when the moment the market touches the red DMA, you're out. You see? So it means you make $2, you jump in again from that point, you'll be able to secure something again, another 2. So we're talking about a small account. This is very safe to do, because even this one here, while you jump in at this point here, according to how your account size is, while you jump in at that point right there, it can mess you up, but still it still come back. That's uh-oh. I think the Zoom has been very long. Some people are sleeping right now. So so yeah, like like you said, when you're disciplined, like when I say take your trade, take your take profit exactly where you see the market touching the red MA. You won't lose out anything. You won't lose out anything. I think I had that account where I didn't have any single loss. Just that derive, as time goes by, they started. I don't know if it started now. They erase the history from the past trades every month. Every month they erase the history. So you find that after a month, you find there's no history for those trades. So, but I used to do this. I jump in from that point. For me, I used to use lot size 5. So you find that each trade I make $10. That's the same as someone using lot size 0.5. Each trade you're making $1. Then from there, each trade I'm making $10. If I use lot size 50, like right now, I'll be making $100 each trade. So which means every opportunity I find, I'll be able to do that. Because even at this point here, let's give an example. At this point, even at this point here, despite it not being exactly how I want it to be, because what I want to do is I want it to be like this. When the moving average crosses below the level 70, I want this one to cave. When this one caves, I want to jump into the markets. When I jump into the markets, I want to work out with times 2 my lot size. Just times 2 my lot size. Not something too big, just times 2 my lot size. So which means I'm using lot size 0.5, I need to make $1. So you see, the moment just touches $1, sometimes I don't know if they know the strategy or something like that. You see, you jump in at this candle, the moment just touches here, sometimes it'll spike. You find yourself in a loss. Be like, oh, okay. But the good part is it will come back. Once it comes back,